Welcome back to the Opportunistic Trader for Thursday, September 13th. Busy morning for sure. I'm joined by my partner in crime, Vincent Lancy. Hey, Vince.
Good morning, Larry. Nice to hear your voice.
And you as well. I want to quickly touch on yesterday's trading action just across the board. The mantra was sort of set up by Asia being weak and Europe actually was flattish, and then our markets had major divergences, which we're seeing on a daily basis now, with the NASDAQ at one point down 90 on the NASDAQ future, and the Dow was actually positive. I was like looking at my screen, shaking my head, which is like the new, I guess, paragon of trading, where obviously nothing matters. Maybe yesterday the outperformance was due to oil, but today oil is getting whacked and gave back basically almost all of yesterday's gains, and the market's still, trading a little bit with that bias. So we'll see how that goes. And yesterday's trades, I think we had two winners and one loser, and I'm kind of bummed out. I was talking to you before the air. I wanted to give myself a little bit more room in oil, and it took me out of the top side of my stop, and then proceeded to trade down to a lower level than where I originally sold it. And what I wanted, to make clear to everybody that's in our, chat rooms and in our membership is, a lot of the stuff that I do, which I could really get granular and explain, is based on really P&L. It's based on sizing, but it's really based on P&L. So, if I have 3 or 4 winning trades and we have a very good day going and I'm convicted in a position, I may move my stop to a level that's outside of what it would generally be if that was my sole position. So I'm utilizing positive P&L on a daily basis to, what I used to call and still do call financing positions. So I would finance the loser. So if like yesterday, I had a nice trade in Apple, took a point out of that. We had a nice S&P trade, took a little out of that. So we had a positive P&L going. The oil was working against us, but we still were up money. I probably, I just didn't want to stay in it because it looked like, believe it or not, it was breaking out yesterday above 70.5. So, I covered it up. But what I want people to understand is a lot of utilizing stops and putting positions on or basis how you're doing on the week, the month, the period of time, to give yourself more leeway. And what's always made us good at the Opportunistic Trader, or myself in particular, was I was able to, what I would call, I wouldn't say take shots, but take a little bit more outside risk by understanding that my P&L was really what I was looking at. But I will tell you, on the other side of that coin, the same thing works to the negative side. So you may have to stop out of oil well before your stop level because 2 other positions may not be working. So it's important to really, in a risk management basis, to really risk manage, or the way that I do it is off of P&L. So if the P&L is good and one position is hurting me, but I really like that position, I'll try to stay in that position because I'm looking at the P&L as a whole. So it's important to understand that. And, we had a couple of questions on that yesterday, which I went through exactly how we do it. And I think, I just wanted to reiterate that on this morning call because I was thinking about it last night, and I want people to understand that's part of risk management. That's part of understanding, position sizing. If we're doing well, we'll size our positions much bigger because our P&L is positive. If we're not doing well, we just want to have a day where we put a positive P&L on the page. So that being said, yesterday was one of those days, and it's kind of, I wouldn't say angering because I got to move to the next trade, but this morning when it's $1 lower and 80 cents lower last night from where I covered it, and I really liked the short, I probably should have stayed. But that being said, we're out of it. We were flat overnight. Had another positive day. Happy about that. Today, going through a little bit of yesterday's action was interesting. Crude was rallying, and we talked about this, Vince, which we could get into later. Crude was rallying because of a hurricane that is hitting North Carolina. So
Right.
I'm not understanding where that plays, but somehow that was the mantra of the trade. And then yesterday was interesting because out of nowhere they threw the wrinkle in that they were going to restart up talks with China, and I think it was in the Wall Street Journal, and the market out of nowhere, out of air, rallied like 15 handles in like 5 minutes. So
and I think that's a really good example of bad poker playing and good poker playing, worth chatting about if we have the time.
Yes. So I don't understand. We haven't even implemented anything on them. Why they would even need to have talks with us, or what they want to talk about, because Trump never did the first 200 million. Forget the 260 or 280. He didn't do the first 200. So that being said, we had a rally, and then actually, which was interesting for the trading day, we actually sold off back down to levels pre the announcement. So yesterday, I think the algos got smoked. It was a whippy day, good trading day in general for traders that are trading day over day. So that was really yesterday's action. And then last night we had carryover in China and Japan. Japan was up a solid 1, and Japan was up a solid 1, and China was up about 1.5. I guess follow through from potential fact that they may talk. I don't know if they will or they won't, but that started the night out. Interestingly enough, when I was watching like the correlation on that at about 10:30, 11, S&Ps were barely up. They were up about a point, and they were not reacting to the China rally. Then we came into European trade, and the DAX actually opened kind of flat and then traded down about, I would say about 40, and then now is up about 60. So it reversed about 102 points off the low. Our markets have firmed. The S&P is up 7 handles. The NASDAQ futures up 28. I do expect today to be a bit of a choppy trade. I'm actually looking to be a seller up in here against 2,900. I think the market trades a bit heavy. If you went home long last night, I think you're waking up this morning, and I think you're pretty happy that the market's up because it looked a little skittish last night. Looking at our our FANG board, Apple is up $1.44. It was actually numbers were cut at Goldman today, so it's bucking that call, and all the FANGs are up anywhere from 20 to 40 basis points, so I don't see a big mover there. Goldman Sachs is up for the first day in 12 days. It's the longest losing streak for Goldman Sachs since the IPO in 99.
They must not have had order flow.
Well, they're saying it's funny. They're talking about that the trading revenues are down, whatever. I mean, that's so in the market. The bottom line is I don't know how trading revenues ever going to come back to any of these large institutions because commission structure has gotten just annihilated. I mean, you could literally trade it like 5 places for 0. You don't realize when you're trading at those 5 places that they're selling your order flow to Citadel and a number of other firms, but overall, you could trade for almost free. So that's really changed the mantra or the or basically their income stream.
The revenue model, right?
Right.
I mean,
and now
the revenue model has to change.
And now they have to trade a little bit for risk, like they used to.
Clients that used to be captive, that had to go to certain banks, don't have to anymore. So prop trading at banks, which is really a euphemism for flow trading, do I front run or do I take the other side of my client's order based on other orders, ain't as easy as it used to be.
No, for sure. It, listen, I remember, being on the phone with Goldman or, any firm and basically getting a million share up market on an equity. Tight. Now you can't get anything. You can't even get anything. So, I mean, the flow game, which 90% of the trading environment doesn't even understand because they either weren't in it or didn't do it. I mean, it was incredible what was going on. I mean, That's where you went for liquidity. You never went to the floor for liquidity.
Right.
You went to a bank to get liquidity. So you'd say, hey, where are the 2,900 calls, 3,000 up, or where can I buy 3,000? And they'd say, whatever the price was, and you'd be put up on the trade in 1 second. I mean, you did it for years.
Right. One block, block trading basically. I have a lot of volume to move. I don't want to have to nickel and dime the floor. I want to do it at one price and get off the phone. And they pay the vig for that.
Yeah,
but they get it done, and they move on to bigger stuff that they have to do.
No doubt. So I guess that game is over for Goldman, and now they're going to have to make money for real. And I don't think there's any investment banking. And it's funny, looking back on it, I used to run charitable trust for a company called Spear Leeds and Kellogg, and we were a broker dealer, so we couldn't get syndicate, but we got syndicate because we were the biggest traders on the street. And we used to give the money to charity. And that whole game is over. I mean, nobody's going public. If you're going public, they're doing it in a way where there's really no syndicate stock. And, that was a big way for these banks to make money, was basically bringing IPOs to market. So There's no more of that as well. So the landscape has changed. So, obviously these banks are going to have a much tougher time. And the market's in a a stoked up bull market, and they can't make money now. I don't know what's going to happen when, stuff dries up. But
I'm getting emails from Goldman asking me to be their client on the retail side now. Look out for Goldman Sachs ATMs coming soon.
Yeah, well, they opened the bank in 2008 because we were a customer there, and we actually custodianed all our capital in their bank because none of these firms were safe. But that's also a story for another day. And overall, the big news is Draghi at 8:30, ECB. And then a story which you have probably much more knowledge on than I do is the story out of Turkey. They raised rates 6.25% to 24%. I'm just laughing because, we're moving like a quarter every 6 months and everyone's freaking out. These guys move 6.25%, which is higher than rates have ever been on the short end since I've been in the business, since 1984. So interestingly enough, they moved 6.25% to 24%. I mean, listen, it's probably a great trade if you believe that the lira can hold up, because it's really a dollar trade, but you're getting 24 on your money if they pay it, which I would assume they would. It's funny. It's reminiscent of Greece. Do you have, could you give us some insight on the Turkish situation, where the lira is trading, how it traded, and what your thoughts are?
Not as an FX expert, but as a guy who pays attention to global macro, Turkey is being pressured by the IMF, which Erdogan would never is a strong word, but never capitulate to what they want to get their financial house in order, and they had been in discussions with Germany. So now the Turkish central bank decides that they're going to play the central bank game. And they're going to make an announcement that they're going to raise rates as a courtesy to whoever is helping them or will help them stabilize their economy or currency. And the bid ask of predictions of what they would have done to the rates was between 0 and 7.25 basis points of a raise. And so they came in at what, 6.5? You said 6.25. Yeah. So it's at the high end, and the market rewards them. This is what's happening right now. The market rewards them for actually raising rates to a level that is higher than their stated inflation, which is like 4 and a half percent right now. I'm not sure, or their GDP. But anyway, the rate raise they did is supposedly going to get them above their inflation issues. So the market rewarded them, and by the market I mean possibly people that were short the lira, people that were anticipating them to comply. And so the lira, went as low as like 603 or 602 before bouncing back up to 6.2. So when I say the lira goes down, I mean it's getting stronger against the dollar. It's an inverse relationship. So what happens from here, we don't know. But it seems to me that if you look at the chart, the last 2 weeks they capped volatility through some way, shape, or form. Or the market gave them a pass, waiting for them to make good on a promise, and they made good on the promise. And now, they have their house in order for the next 48 hours. Mind you, President Recep, Erdogan said hours before they actually raised rates that they should, quote, lower rates. Raising interest rates is the mother and father of all evil, stuff like that. So he's playing the central bank game. He's a little ham-fisted about it, but that's what they're doing. Is this a this is something to trade? Do you believe it? Fade it. Do you or don't fade it? If you don't believe it, fade it. But when Erdogan said that Turkey should cut interest rates, the lira dropped 3%. By dropped I mean it went to 655 from 636, I would say. Now it's trading at 619. So if you look at an hourly chart, you get an idea of jawboning gets the lira higher, and then action gets the lira lower, and now we're bouncing back to basically almost a violently unchanged trading range. I hope that puts a little color onto it.
Yeah.
If it's okay with you, Larry, I wanted to just go through the poker hand that was China and Trump yesterday.
Sure.
This won't take long. Just go through the events and connect the dots. Trump gets the okay to implement $200 billion in tariffs. He doesn't do it. He can do it. He doesn't do it. Instead, he threatens to impose another 260 billion more. As a trader, as a poker player, that's me seeing a guy who's got permission to drop a hammer and who threatens to create a bigger hammer. That's a blink in my mind. That's like a guy who wants to raise the pot and plays with his chips. And sure enough, a couple of days later, now mind you, I didn't trade on that. I just noticed it. I'm just watching behavior. A couple of days later, you now have, and this starts on the China side, the Chinese Commerce Ministry spokesman, I'm not sure how to say his name, Zhao Feng, said the country, this is China playing poker back, said the country had received an invitation and is working on details of a new round of trade talks. That's China saying, hey, the U.S. came to us the day after Trump is tooting his own horn. And sure enough, Mnuchin said, I approached them about coming back to the table and talking. So that's bluff called. And at that moment, the yuan strengthened, meaning it dropped against the dollar. And we had a little bit of chaos starting at 10:30, 11 a.m. So as a poker player, you wait Trump out. And sure enough, Trudeau just piled on top of that, saying, one sit down and talk is not going to close any NAFTA deal, which makes sense. You're getting like a semi-coordinated global attack on Trump's bluster. What surprised me, and this is off topic, but what surprised me, and guys like Greg could weigh in on it, I'm surprised that the Canadian dollar didn't strengthen on that information. All I'm saying is, sorry, this is an opinion, my opinion. Trump is a horrible negotiator, and I'm sorry, he gets dealt he gets an ace in his pocket. There's an ace on the flop, and he goes all in, and he bluffs the weekends out like Mexico, and then he goes to Canada and tries to bluff them, and they fold a little bit and then they push back, and China just sits back and says, dude, you're looking at the next 6 months. We're looking at the next 600 years, and we'll wait you out. The way to play Trump, if you're a politician, is play the lawyer game. Wait him out, because when it gets to the Supreme Court or Congress, he has to retract. And right now, Trump is in a corner, in my opinion, sucking his thumb, setting Kudlow out as the bad cop and Mnuchin out as the good cop, trying to retrieve this defeat that he created from victory.
Listen, we would need about 10 shows to go over his mantra and his mindset, because it's actually...
As a New Yorker, I just saw it a million times.
It's actually, I mean, he's not a good poker player. I mean,
no.
Listen, Canada still hasn't signed on. They'll just wait him out. They're going to keep waiting, and they're like, listen, this deal's not good enough. Trump's yelling. He's screaming and yelling in the White House. Get something done. Get something done. Oh, we'll give him this. Okay, don't worry. Give him that. Right. Don't worry.
Right. and if he can't turn that what's the word? If he can't turn that dialogue or rhetoric in his favor, he's going to say, "Oh, look over there. There's a hurricane," or "Look over there. We're making progress in this." And that's what happens. And we know this in the U.S. I'm not anti-Trump. He's my president. I respect the office, but his MO is basically Reagan without the teeth. Reagan would have imposed the $200 billion in tariffs and then said, I got $260 billion more. Trump said, I want to impose the $200 billion in tariffs. And Kudlow probably said to him in his ear, maybe you shouldn't do that. He's like, all right, well, fuck it. I'll threaten him more. So,
yeah, well, listen, that's part of this whole trading game. You don't know what's coming today. It's all rumors and innuendo. I think it's important to see that and trade around that. And I think maybe, that's a good reason to, get information that, we're giving out and thoughts that we're giving out that could help you, navigate through the noise of the landscape. It's interesting because a lot of times this stuff is sometimes it's a fade, sometimes you go with it, sometimes it's non-actionable. So it's really dependent on how and what comes out and how it plays. It's the markets, to me, being really laser focused, especially on the S&P. You could just tell, you could tell this morning, for whatever reason, the algorithm is to buy all morning, no matter what. So, until they turn the knob or the dial, which they could do at any point in time, the market is bid. When I woke up this morning, the S&P was up 3. Now it's up 8. We're now 7.25, and it's been straight up. And really, I'm looking at Europe, and Europe actually just sold off $30. It's only up 46. It was up 70 about 10 minutes ago. So I don't know what we're looking at. I don't know what we're following. It's certainly nothing that, you got to figure it out as we go. I mean, that's our job, really, is to, figure out what's moving the market, why it's moving, what the next move potentially can be, and what cues we're looking at, what's really driving the market. So, today, I just don't understand it. I mean, again, the market is where it is, so you can't do anything about it. You got to trade from where it is. So up 7.25, I'm not quite understanding because the DAX just came in 30. So, on a mean reversion, I'd rather be a buyer of the DAX versus the S&P up 7, but those trades don't work as well as they used to because it takes a longer time. The algo just sits on these trades. So, today's interesting. Bonds are on the low. Again, they're not above 3%, but I just believe we're going to see that print soon. I don't know if it's coming today or tomorrow or early next week, but I do believe...
Treasury's auctioning bonds at 1 p.m. today. It could be today.
Yeah. I mean, I don't know. What's the yield? I think it's about 2.97.
298 right now.
Is it?
It's up a little bit. Yeah, 298.
Yeah, so I don't know how that doesn't play into the market, but for right now it doesn't. And overall, that's sort of what we see. I'd actually like to. I know Draghi's coming at 8:30 and whatever, but I'd like to stay on, to discuss, potentially what has been said in market movement off it, because
Yeah.
we should get some movement here in a couple of minutes.
We could do that.
You
That
know,
could be a good conversation.
Yeah.
As our jaws drop because of some ridiculous statement that's made and how the market reacts to it.
What do you mean? I have to keep rates low for an extended period.
I believe the expression was, "We'll do whatever we have to." That's the thing that's going to be on his tombstone. We'll do whatever we have to. But going into him conversation, they decided to keep rates unchanged through summer of 19, and I think he's going to be going live soon.
I mean, listen, is it that bad out there? I mean, maybe it is. I don't know, but I mean, if it's that bad out there that he can never raise rates, and literally, I forgot, we were discussing this a month ago, Mike and I think there's 8 or 10 countries that have negative rates out to 5 years or whatever. I mean, it's bizarre. Yeah. It's bizarre.
I've called those countries. I want you to know that I have made personal phone calls. I'm joking here, but I made personal phone calls to any country that is willing to give 4% for their money. And I said, look, I'll lend it to you for negative 3%, but I don't get my calls returned. I don't understand why.
I'm just not understanding. Like when you open up a bank account in Germany and you go and you put your money there, what do they say? Okay, welcome, Vince. You just put your money in Deutsche Bank and you're paying us 3% to have your money. You might as well keep it in the house, right?
It's ridiculous. Right, exactly. But or put it in stocks, because you will be punished if you put it under your mattress.
No, it's actually shocking to me. Of what's going on across the world at this point in time. It's interesting. I just have no words for it. I just don't. I mean,
which sounds like your head. I want to say something to the audience on this. When a trader, and I'm not speaking for Larry specifically, but when a trader says this doesn't make sense to me, it's actually liberating, because if you don't see correlations, then you don't delude yourself into correlations, and you're free to trade based on how things move, not based on what you anticipate them moving. I see a correlation between, the DAX and NASDAQ, and it makes sense because of this headline or that headline. That stuff can make you money, can also get you in trouble. Sometimes it's good to not, understand what's going on, because it frees you to trade agnostically, which is, I think, more your style. I'm not looking at rates there and making any assessment. No, I'm making a general statement.
No, I know, but what I'm saying though is I'm just not, First of all, the dollar's been strong as hell, and if you move money here, what did Draghi say? He's leaving rates low forever. Right, so the market rallied a little.
Well, he's taking a seat right now.
Whatever it is. And something must have just came out, because the S&P is exploding up 10. NASDAQ's up 40. I don't know, it's the same trade every time. I mean, it's so weird. It's just weird action. There's nothing more you could say than it's weird. Every chance they get, they want to buy stocks. I don't know why. NASDAQ was bidless yesterday. I mean, literally bidless. It was down 100, crashing into the abyss, and now everything's fine, But do you have any headlines out of there, Mike?
He just sat down to talk.
His text is definitely released. So anyway, I don't know.
Claims came out a little better. Some initial headlines.
It's Draghi.
Euro's only up 20 pips right now, so slightly.
Somehow the S&P rallied $4. No offer, and Draghi basically is keeping rates low forever. CPI was up 0.2. And I guess that was better than expected. No inflation. We had one inflationary number, which was the wage.
EPI?
No, the wage number out of the jobs number. Was showing increased wages, and everyone panicked, and they forgot about that. That was last Friday, so that doesn't matter anymore. And,
But that's because there's people have left their bartender jobs and are now taking street sweeping jobs. So you've got an increase in wages now. The service industry, people are underpaid. That's really what's going on, and they're just wage increases are 1.8%. Yeah, well, inflation is 2.5%. That's not helping people. Anyway, that's my bias.
Anyway, I don't, I guess it's the reaction to CPI today that is moving us up. I don't see any comments really out of Draghi, but
No.
they
I'm reading his.
They love the
I'm reading-
CPI. I don't know why, but they love it, and the market will start up 950. I do think it's a fade. We will sell up against the figure 2,900 again. It's funny. 2 days ago, we were at 67 on the S&P, so we rallied a little over 1% and change. Market is no sellers right now, which is interesting. Again, yesterday was no buyers on the opening, so today no sellers. We'll see. We'll see where everything goes. We'll look at the straddle. It's not an expiration day today. The straddle is pricing in extraordinarily low, actually, which probably means we're going to just stay around here or trade up a slight bit. The straddle is pricing in only about $10 or $11. We looked at it 2 days ago. It was pricing in 17, so it's going to be interesting. I'm not bullish up here. I think the market has work to do, but we'll see. We'll see what happens. Do you have any thoughts before we?
No, just an observation on tape right now. The dollar dropped a little bit after CPI. Draghi is talking. His focus seems to be more on addressing the protectionism, trade war, trade tariff stuff, and of course he's addressing Italy as well. But the significant stimulus is still needed. That's the leading statement coming out of there. I think whatever he's saying today is going to be not to increase volatility in an already volatile market. That's the only thing I could add to that.
Well, I'm gonna rebut you on a volatile market because I'd say this market is not volatile. I say that the market, people they're complacent. They're buying Amazon at 2,000. How is that investable? How is that an investable security? Right. What are you going to do? You're going to buy one share?
Right. Yeah, I'm looking more at EM. I'm looking at EM currencies. I agree with you. There is no volatility in U.S. stocks. There is only trend. How's that? It just goes one way.
Up. It just doesn't matter. You could close your eyes. As scary as it may look, just buy them, and you'll be fine. So
why don't we turn to what's on your radar? I mean, one of our members, and you talked about this earlier, I want to touch on it and bring it to what you're looking at in WTI today. There's a mantra that I was taught, and it's not blind. In general, we put on trades for probability reasons. We take off trades for value at risk reasons. So if you put on trades in a compartmentalized way all the time and don't look at each against the other, the pros of that are I'm up in this, that's my stop. I'm down in that, that's my stop. And you wouldn't give yourself a chance to be right in a position like oil. And that works, but it also just completely negates intuition. And if you have a good intuition and if you carry positions based on VAR, meaning I'm up, $100, dollars today. I don't see anything that's changed in this market, even though it's going up my ass. I'm going to let it run a little longer because I have money to invest in this idea. That's a person who's looking at their VAR for the day. They'll take it off when it jeopardizes their rate of return on the day. And conversely, as you said, trading intuition and taking off positions on VAR will also make you have to cut ideas that you like short because something else has gone against you. But the person who understands why and what they're doing and is consistent in doing it is fine. It's really no different than parlaying. Hey, I made $100. I'm going to let $10, of that run because I feel good about it and I don't think I'm wrong.
Well,
And
listen, that's what makes a trader great, is risk management and understanding how to size positions and how to take risk when you're up money and all of that. That's one thing that you'll get here is most of our guys, if not all of our experts, trade in that manner where they're understanding risk and they're sizing positions and they're being able to hold positions. For me, I want to short S&Ps, if we make a new high on this next move up at 99.5, I could give it a little bit more room, A, because I'm having a decent week, and B, because I feel like we're at the top end of the range and they have to really prove it in here if it's real. But
Right.
again, the markets are extremely interesting and difficult. It's funny, and I've never seen it more than I've seen it now, and I've been doing it for 30 years plus. Like, each day is different. Yesterday has zero to do with today. I mean, you zero. Yesterday, NASDAQ was imploding. I mean, imploding. It was down 100 at one point. And today, it's not only down 100, it's higher than the close from the day before, and nothing has happened. So I'm just trying to, I can't figure it out. They throw fake headlines in. They're throwing a fake, there's a meeting with China, whatever. I know. Okay.
People are trading percentage moves instead of notional at risk. That's what I'm saying. Oh, it's down 100 points. That's 1%. Yeah, well, why don't you look at your wallet? People don't look at their wallet as much anymore. It's not real money until it's real money. Let's put it that way.
Oh, listen, they've been rewarded to buy every dip, so that's what they're doing, and you can't get in the way. And it's just funny because NASDAQ was the weakest thing on the board. Now it's the strongest thing on the board, all in a day.
Right.
I know. Yesterday there was a Dow outperformance. Today the NASDAQ will outperform the Dow because yesterday it didn't. That's the reason. So
right. Yesterday we were scared about the NASDAQ, Larry, so we're going to roll everything into the Dow. Oh, today we're not scared. Let's roll everything back into the NASDAQ. Like, it's just portfolio hot potato stuff. Yeah. And, that's it.
Yeah, so that's really it. Straddles are pricing low. We'll see what happens. Volatility has come in a bit. In the front month, it's down to 1380, which is high, but it had been as high as 15 and change off the sell-off. So, keep an eye on that as well. Markets bid to the moon. We're on the high tick as we get off the air. Everyone loves it. So we'll see where it goes. Looking to sell up a little bit higher here, and I think the market should come in. But again, it's day hasn't begun yet, so we'll have to see the action. I wanted to go over the schedule today at 9 o'clock. We have Joe Vakovic talking about grains. I'm interested to hear. There was a big ag report yesterday. Interested to hear if he has thoughts on that. At 10 o'clock, we have Tony Greer from TG Macro covering the equity markets. He's very insightful, and he finds stocks that are looking not good or good, and does a sector analysis, and interested to hear from him. And then at 11:30, we have Bryn Kelly coming on. She deals in electricity and nat gas. She'll be parsing through the nat gas numbers and discussing other thoughts in the energy sector. And then at 1 o'clock, Tom McEntee will be on to talk about his recent equity trades and going through some charting and showing us what he looks at on a technical basis and option pricing. So that's a schedule, pretty full day. I'll be around both on audio in the chat room all day today, looking for really good trading opportunities. Again, market's up at 10. I'd like to short it up in here. Haven't put the short on yet, but we will be putting the short on. I'm hoping for a little bit of a pop. If I don't get it, by 9:30, I will sell the opening in S&Ps, and we'll go from there. Any other closing thoughts?
No, just one number above 1207.5 in gold. Look for the teens to be skated through today. Below 1207.5 in gold, I wouldn't be long. That's the only thing I would say about gold today.
Okay. All right. Well, we'll chat later. Thanks so much for joining me, Vince.
Thanks, Larry.
All right. Have a great day.
Forward to it.
Bye.